The shift of the switch. Why XRP and XDC are the chosen ones. That is our video topic for the day. I believe you're going to really enjoy it. By the way, if you like these videos, do hit the thumbs up. Let's tag the algorithm. We produce these for free. We do have ads. In fact, we're going to have a decent ad right now, and we'll be right back. Hopefully you're not leaving your cryptocurrency on the exchanges. Exchanges can fail and get hacked. If you don't own the keys to your coin, then you're not in custody of your coin, someone else is. Be sure to get yourself a cold storage wallet. I suggest a decent wallet after having owned several different wallets. I like the decent wallet. I like the easy access with the thumbprint. I love the features inside, how it Bluetooths with my phone and gives me a large screen. I also like how I can order two. I use one for a moon bag, coin I'm not going to touch for maybe years. I use the other one as just my regular wallet. You can order two for $219, that's $99 off. Or you can order one if you wish. When you order, your shipping is free if you live in the US, the UK, the EU, or Japan. Order one today. I think you'll be satisfied. To order now and get the discount, you can use the link that's appearing above my head. There's also a link in the description, and generally there's one at the end of all my videos. Go ahead and order now. You'll be satisfied. Thank you for watching that. It benefits both channels, and it really helps us out, and we sell a ton of them. Thank you for purchasing them. But today's topic, the shift of the switch and why XRP and XDC are the chosen ones. Max, what do you got for us?
Well, once again, it comes from our brother in the community, Smoke, and he has just fabulous research. So give him a follow, over at SMQKEDQG, and you'll see it on the screen here in a bit anyway. So what is he referring to? Well, he gets into the nitty-gritty. XDC adoption in trade finance is officially accelerating in, of course, 2025. We will mention a little bit about XRP here in a bit too. But ITFA's latest memo confirms what many have been anticipating. Blockchain is no longer just a concept in trade finance. It's happening now. That's right now. Quote, some lenders are already using digital asset technology as part of M-letter instruments using, for example, Inigio, Cargo X, and XDC Trade Network. XDC is already integrated into this framework, actively facilitating real-world trade transactions. This isn't future speculation, it's live adoption. Well, in 2025, usage will only expand as institutions move toward digital negotiable instruments, which is referred to as DNI, and on-chain payments to streamline trade settlement. Notably, Ripple was also mentioned as a potential player in digital trade finance. Guys, a lot of people always focus on XDC as only being that main solution. But, to see Ripple part, that's a big deal. I think, if anything, this is why, you've seen in the past R3 Corda with XRP. And then, of course, you saw that shift, no pun intended, lately within the last few years with R3 Corda bridge to XDC. So just want to point that out. Getting further into this from Smoke, he goes on to mention that this reveals growing institutional interest in blockchain-based payments for global trade. And yes, XDC and XRP emerging as key networks in this shift. This is why in the title, we have the title of the shift of the switch, not the flip of the switch. So just in case you didn't catch that. All right, a little bit more about this. From Smoke, he goes on to mention, the timing on this memo is January 2025 is absolutely critical. It's not discussing the possibilities years down the road, but regulators, banks, and fintech leaders are integrating blockchain into trade finance right now. That's key. All right, Smoke's key highlights for you guys. Let's blow this up. He cites International Trade and Forfeiting Association, aka ITFA. It's this whole thing of fintech's committee's top priorities for just that 2025 January report. Then he goes on to mention in the highlight, the committee's agenda for 2025 will see it continue to support early adopters, encouraging interoperability and scalability of technology and connect fintechs activities, I should say, with other areas of ITFA's work in education and advocacy. As we get further down into the bottom part area, these are the committee's top 4 priorities coming in this year. Number 1, supporting digital negotiable instruments, the DNI uptake. Number 2, developing the new financial crime compliance initiative. That's interesting. If you're not aware of it, like it says here, financial crime compliance is a number 1 priority for banks, according to Andre Casterman. And of course, there's some other ones, and then we'll pull that up for you. Because when we get into that, this is what comes up. On the next page, it's number 3. Launching a new digital payments in bank-to-bank trade workstream. This might be one of your key highlights from the whole video. Let's just be honest. I will read this part verbatim. The fintech company or committee is planning to widen its focus in 2025 to look at how to apply digital asset technologies to trade-related payments. This decision reflects moves by regulators around the world to work out how to create a regulatory framework around the use of stablecoins, cryptocurrency that has its value tied to another commodity, currency, or financial instrument. The European Union passes Markets and Crypto Assets Regulation, MiCA, in 2023, and the UK is looking to introduce stablecoin regulation via its property bill. Now, if you think about that, this is where we have real-world asset tokenization being turbocharged through regulations. Quote, if you combine DNI and tokenized payments, we have a fully digital environment where you can have digital bill of exchange and then a digital disbursement on-chain, according to Andre Casterman. This will allow for the more seamless movement of funds for trade and improve the speed and efficiency of global business. This is massive. And, sometimes people just look at price don't move much. But whatever the case be, Casterman in the highlight notes that the digital payments companies, such as, yes, Ripple, yeah, he's mentioning Ripple, and he's, an XDC guy, are looking at the trade finance market to see how their payment capabilities could support trade. And then also this quote from Andre Casterman, some lenders are already using digital asset technologies as part of analytic instruments using Inigio, CargoX, XDC Trade Network, but he states we will now be adding the on-chain payment leg to those trade flows to deliver, yeah, you read it right, faster settlement. So my key takeaway is I want you guys to all understand that it's there, and it always has been there, because it's other ones part of the ISO mix, recognizing each and every one's specific technologies. But who's the plug in the connector from a while back? It's R3 Corda. They recognized XRP years ago, and of course they got this big thing with XDC with the R3 Corda bridge. Moving forward, it's basically like this. It's understanding smoke is right. XDC adoption in trade finance is officially accelerating in 2025, and the chosen ones are XRP and XDC for trade. We need to stop saying it's just XDC. Your key takeaway from that will, before we kick it into this AI summary of why it all matters for XRP and XDC moving forward, Mr. Will Fix.
Yeah, for me, the key takeaway is the use of XRP, probably the settlement part of that, but also with smart contract capabilities coming on board. I know there's some more development there that's been going on lately. The other dynamic thing is they're not waiting. They've already started, which means people are moving forward as if the SEC case is over. There's just been enough information come out from the SEC acknowledging ETFs and acknowledging, ETPs and other things that people can tell already that the path forward is going to be cleared by the SEC. So they're not afraid to move forward. Doppler Finance, just added where you can earn a yield. And I got some XRP that I've deployed that way to observe and participate in it. But I just see people taking steps that doesn't require as much faith, since we know a new SEC leaders come in, and we know regulations are coming. So this is pretty exciting to see people go ahead and take action. So that's my take on this information. It's exciting to see. It means that really means that when we get clarification on regulations, it's already in play. So now it just becomes a matter of more adoption.
Yes, absolutely. So with that said, we have this AI video from Daniel. That's our AI assistant. He has done an excellent job of summarizing the key findings from Smoke and also explaining to each and every one of us why it matters moving forward for both Ripple and also XDC. You want to stick around for that. That's going to go ahead and play here shortly.
International Trade and Forfeiting Association, ITFA, released a memo in January 2025 confirming that blockchain adoption in trade finance is accelerating, with XDC Trade Network already being used in real-world trade transactions alongside platforms like Inigio and CargoX. Lenders are incorporating digital asset technologies into MLETR, model law on electronic transferable records, instruments, marking a shift from concept to live implementation. The memo highlights that 2025 will see further expansion as institutions adopt digital negotiable instruments, DNI, and on-chain payments to enhance trade settlement efficiency. Ripple XRP is also noted as a potential contender, signaling strong institutional interest in blockchain-based payment solutions for global trade. This development reflects immediate action by regulators, banks, and fintech leaders, not just future speculation. Why is this significant, and what does it mean for Ripple XRP and CINFIN XDC moving forward? The significance lies in the following. Real-world implementation. The move from theoretical discussions to live adoption, e.g., via XDC, Trade Network, Inigio, and CargoX, demonstrates that blockchain is no longer a speculative tool, but a practical solution being integrated by lenders, banks, and regulators. This validates its scalability and reliability in a high-stakes industry. Regulatory and institutional buy-in. The mention of MLETR instruments, an internationally recognized legal framework for electronic transferable records, shows that regulators are aligning with this shift, reducing legal uncertainties and encouraging broader adoption. Economic impact. Trade finance underpins trillions of dollars in global commerce annually. Streamlining it with blockchain could reduce costs, accelerate transactions, and unlock liquidity, especially for small and medium enterprises historically underserved by traditional systems. Competitive landscape. The inclusion of both XDC and Ripple XRP in the memo signals that blockchain networks are vying for dominance in this lucrative sector, fostering innovation and competition. Moving forward. Established position. XDC's integration into live trade finance transactions, e.g. via LETR instruments, positions it as a frontrunner. This early mover advantage could solidify its role as a go-to blockchain for trade-related digital assets and payments. Expansion in 2025. As institutions adopt digital negotiable instruments, DNI, and on-chain payments, XDC's usage is poised to grow. Its focus on trade-specific solutions, like digitizing bills of lading or invoices, aligns perfectly with this trend. Institutional partnerships, continued collaboration with platforms like Inigio and CargoX, alongside banks and fintechs, could expand XDC's ecosystem, increasing the demand for XDC tokens used for transaction fees and smart contracts. Market impact. If adoption scales, XDC's value proposition, low-cost, efficient trade finance, could drive token value appreciation, though this depends on broader market dynamics and regulatory developments. Moving forward, emerging player. Unlike XDC, Ripple's role in trade finance is described as potential, indicating it's not yet as entrenched in this specific use case. However, its inclusion in the memo reflects growing interest from institutions in leveraging XRP for trade-related payments. Complementary strengths. Ripple's expertise in cross-border settlements, e.g. via RippleNet, could complement trade finance by facilitating instant cost-effective payouts once trade transactions are settled on-chain. This could position XRP as a bridge currency between trade ecosystems. Competition with XDC. XRP may compete with XDC for institutional adoption, but their focuses differ. XDC targets trade finance workflows, while XRP excels in payment finality. Partnerships or interoperability between the two could emerge as a win-win scenario. Market impact. Ripple's expansion into trade finance could boost XRP's utility and adoption, particularly if it secures major banking clients. However, its success hinges on overcoming regulatory hurdles, e.g., ongoing SEC litigation clarity as of early 2025, and proving its edge in this new domain. Broader outlook, synergy, or rivalry. XDC and XRP could either carve out distinct niches, XDC for trade documentation and workflows, XRP for payments, or compete head-on as all-in-one solutions. Interoperability between blockchains may become key as the industry matures. Adoption catalyst. The ITFA memo's timing, January 2025, and the focus on right-now adoption suggest a tipping point. If 2025 sees significant uptake, both networks could see increased transaction volumes and token demand. Global trade transformation. Beyond XDC and XRP, this shift signals a broader blockchain takeover in trade finance, potentially drawing in competitors like Ethereum, Corda, or others, though XDC and XRP are currently highlighted as leaders. In summary, XDC is ahead in trade finance adoption with a clear use case and live implementations, while Ripple's XRP has strong potential to expand from payments into this space. Their trajectories in 2025 will depend on execution, partnerships, and how effectively they capitalize on this blockchain-driven transformation of global trade.
All right, Will, so with that said, I think Daniel, our AI assistant, absolutely knocked it out of the park, but I want to get your closing thoughts, sir.
Well, I think it's important. One of the things that talked about was digital negotiated instruments. And just to brief everybody on the difference, smart contracts are code-based automation tools, and a digital negotiated instrument is a digital representation of a legal financial instrument. Another difference is smart contracts execute on predefined rules automatically, and a digital negotiated instrument represents and transfer monetary value or obligation and triggered by a predetermined set of rules there. Also transferable. So it's like a ticket of an agreement, that can be transferred to other people, which lends themselves to be used as a debt or credit instrument at the same time. So just wanted to bear that out because it can be confusing with all these names that sounds like it's all smart contracts, but it's not. And the fact that they're stepping forward with those, pretty cool stuff, man. I like to see it because it's just greasing the wheels for that day and time when regulations are passed.
Well said, brother. Thank you guys so much for sticking around to the end of the outline. And with that said, do us a solid if you listen to the entire outline and type this into the comments, these 2 key words, chosen ones, and we'll know that you listened to the entire outline. As the saying goes, know what you have, know why you hold it. The research trumps flood 110%. On behalf of myself and Mr. Will Fix, thanks for tuning in. We'll see you on the next one.